It's gonna be a little video here going to break down my trades from today. Trades over the last few days. Just a little quick overview of the market in general from today at least. So what I do is I'm always going to start on the lower time frames. Now I caught this move, this short. Let me show you. So it was something like this. This was the move, caught it from around here and rode it all the way down, and then the next day rode it down as well. But let me show you how I caught that move. Let's go ahead and take this stuff off the chart. So what you're always going to want to do is start at like the 4-hour, daily, weekly. Start at your weekly, get an idea of what price is looking like. Like for example here, you have price, it comes up. Jumps around a little bit, creates a new high, we break over this high right here. Price comes up, comes back down into a fair value gap. Little tiny fair value gap right in there. Now this is bullish market structure. High taken, comes back down, respecting the fair value gap, and look how the bodies of the candles close above the fair value gap. It's a good sign. And then, we create a new high, we come back down, and we again have a fair value gap in here. This is a new weekly candle that just opened. We closed above this fair value gap again, and right here, always that last candle before a move in an opposite direction. In this case, the last down close candle before I move up. We have our order block, came up, shot right through it with strength, came back down, closed above the order block. So we're looking bullish for the week as of now. Okay, that's your daily chart, same thing. But now before we started this move up, let's just take our attention to this. Let's just focus on this right here. Focus on this section in price right here. Change these colors. And this is what we're going to focus on for right now. Now on this 4-hour, let's take a look at what we have. Price ran way up here, created this low, came up, created this low, and then created a new high. Okay, so now there is no buy side liquidity to be ran. That should be noted. The buy side liquidity has been taken, all of it. This is the highest high for NQ. And then that low that we created, we came down below the low, and then came down and made another low. You always want to look at your order blocks. What is this right here? We have an order block. So not only did we create this new low, price held down below the order block. The order block is rejecting. Not only that, no bodies of these candles closed. Once it went down below the order block and took out the low, nothing came above it. Not even a wick, which is showing a lot of weakness in the market. So let's take that off for a second. So now we have again another order block. Really, let's just focus on this one. So price came down, created the new low, back into the order block, rejected down, bodies of the candles are closing below this order block. Alright. And then we have this move down here. So now that we've done that, let's focus on this right here. Before this move up, let's just focus on this little down move. Let's bring it over here. This is how you will frame the trade. We frame the trade on the higher time frames. So, buy side liquidity taken. We have a low in place, displacement below the low, showing market structure has shifted. And then we come back up into this order block that we created. Price held below the order block, holding this low intact. Look at these two equal lows. We'll mark those out. Make that red. And you have a few different things here. Let me also mark out this order block right here. I really don't want to change my order block colors, but I'll just make that like that. Hopefully that didn't permanently change them. I don't know. I really do like those colors for my order blocks. Okay, I'll worry about that in a minute. Alright, so we have this order block marked out. This one, let's go into the hourly. Before that, actually, let me go back for a second. So we have these equal lows marked out here. You want to have your levels marked out. And I'll go over all this in a minute. So we have one level of area of interest right here. And then another area being this order block right here. And this one right here. Mark these levels out and we'll go over them. So our areas of interest, equal lows right here. This order block. The top of that order block. This gap. This order block, which also has a fair value gap right next to it. And these equal highs. So again, so there's no confusion. Price has run up to the highest high, taken all buy side liquidity, and then we trade below a swing low. We have an order block created, and the order block is holding price below it. So you have all these indications here showing you that price wants to move lower, and you have areas where it's wanting to reach to. And every time once price reaches one of these levels, you want to see how it reacts. Like right here, for example. Right when we come down here, we're showing a lot of strength. And when you see that, you can expect it to trade down to the next level. And once we get to every level, we want to see how it reacts. Does it want to look like it wants to reverse once it hits this level? Or does it show continuation? And you know that by how it reacts to order blocks and fair value gaps. You have a gap right here. Let me hide these drawings for 1 second. As we came down here to this gap, price starts moving up. Now many people might think that price is going to reverse here, but look how it reacts to this fair value gap. Rejection lower. Also, it touches the bottom of an old low. Rejection off that old low, and the fair value gap sends it down lower. Once you see that rejection, you can expect it to come down to the next level, and so forth down to this level here. And turn these drawings back on. Okay. Now I'll just quickly go over these trades very briefly. All right. So how you could have framed this trade is you could have entered as we go into the order blocks. You always want to wait to see how do we react off these major key levels. So you would wait, watch price run into this order block, trade down below, create that low, trade back up, and create a new low, and you could enter right on this fair value gap. And then being that we still haven't hit the key level, you can ride price down into there. Same thing with here, same thing here, and you want to see how it reacts to the order blocks as it moves. Look at this move up here. Now many people will think, oh look, we have displacement up above a swing high after a low was taken. That's your classic 2022 model, 2022 ICT model. But you can't just take a displacement above a swing high as your indication to enter a trade. You need to bring everything together. Look how we come up and we don't even touch this order block. You want to see how it reacts. We create this Venom model right here. A Venom model is a fair value gap on each side. Something looks like this. Trade lower down to the key levels. And the purpose of this video was not to go over this downside move. This is just some bonus stuff, but so now with all that in mind, let's take all this stuff off. When did price finally have a nice move up after this? Well, let's remove everything. Just put a line right here. Look at this area of liquidity. And I'll definitely go more in depth with my future videos. I am very tired, and I do need to rest. But so look how we came down into this important level. Look at the reaction. Let's drop down into a lower time frame. So we wanted to see a reaction once we get to the key level here. And this is where the main purpose of me even creating this video was to go over the trades today. I just wanted to quickly go over a little bit of that other stuff since you have a greater understanding from this video. Now price has come down into the key level. We want to see how it reacts. Comes up, shows displacement higher, which is great. You do not ever want to enter the trade just off of that. You want to wait for confirmation. We come up to the order block. Mark out this order block. I need to change these colors back. There we go. Let's just drag that all the way over. Now, we came up into the order block, rejected down. But then look what happened. We created a new high. Rejected down, created another new high. Look how price is reacting off of these levels. We hit a key level, displacement up. The market will show you its hand. And it'll give you cues and hints to know what it's going to do. You just have to wait and be patient. Because the trades are going to come. How you will destroy yourself, how will you do that, you ask? Not being patient. So we come up to the order block, reject lower. This is where you want to be watching. We've come down to this key level. We have a displacement. We come down to a level where we would be expecting it to go higher, just like here. Right here, off this order block, we would be expecting it to possibly reverse. It comes down, starts reversing up, but we want to wait. How does it react to fair value gaps, old lows, old highs, and order blocks? We came up here. Look at this right here. This move will get a lot of people trapped going the wrong way. We come down to this key level, displace higher, people thinking it's going to come up and take out these highs. But you want to wait. How does it react to the fair value gap or the order block? We come up, touch these old lows into the fair value gap, reject lower. Same thing today, come back up, reject lower. So again, every key level, watch how it reacts. I'll make another video on key levels later on. We come down to another key level here, this order block. What do we see? Continuation. Let's look at the next level. Look at these equal highs. We come down, showing a possible reversal. And what would we be aiming for with that? If it does reverse from here, the bottom of this order block. So let's dive deeper into this. Let's go on the 5 minute. Where are we on the 15 minute? Yes, 15 minute, okay. Okay. Now we're at that key level. Displacement higher, good sign. Order block, how does it react? Goes lower, okay. Comes up, new high. Looking nice to go higher. Comes back. Look at this, order block. Order block is holding up price. Price comes above, trades above that order block. Comes back below. Order block is holding price and supporting. Now this move here will trip a lot of people up. Because you'll think, oh well, it's rejecting the order block. This is why we wait. You wait. Well, what is this right here? What are these? Equal lows. Make that a different color. Let's make it orange. Look at these three lows right here. Equal lows. We're waiting. How does it react? Minor sell side liquidity comes down, take out. Now many people will try to get in short right here, but you're waiting. Now how does it react? We come down into this fair value gap, trade above these highs, and then the market opens. A New York session opens. Now this right here, this is your sign that you know this trade will be going up to take out these old lows and this order block and eventually these highs. Because we have key level, displacement higher, reaction off the order block, rejection, takes out minor sell side liquidity, reaction to a fair value gap. Because if price wanted to go lower here, it would have traded below this gap, took out these lows, took out this minor sell side, comes into this gap, and then displaces higher, creating new highs. And then look at this original gap. This gap is blown through. So now, with all that, let's remove some of this stuff. So now what happens? Trade above that. Now, you could have played this trade in many different ways. You could have had your entry as soon as we come back down to rebalance into this gap. You could have entered on this order block, this fair value gap, where your stop would be where? Below this low. And your first target would have been, where, what did we say? The bottom of this order block. Your second target would have been this order block. Let me shorten this up. Let me just delete that. Look at this order block. Where does price go? Right to the order block. Comes back down, rebalances into the fair value gap, trades higher. Comes back into this order block, trades higher. Now let me go over these specific trades that I took today, because I took about 3. Took about 3 trades. Alright, same thing we just said. Once I saw this, I entered in right on this order block, this gap, rode price right up to that low. Look, I rode price right up to the bottom of this order block. Hold on, not that one. Right here. That's where we're riding price up to. See what it looks like on the 4-hour. Right up to that low. Right up to this order block. Real quick, I'll go over these other two trades. I'll clear this one out. Okay. Now, for the second trade, was right. And I left these up here so I didn't forget where we're at this morning. So the second trade here, let me see, try to remember. Okay. So this price target was, I went short here. Let me move this over a little bit. Okay. So, price, we came up. Okay. Came down, created this low. This is important because this is what a lot of traders will do who trade ICT concepts. Look how price came up, created a high. Price came down to this fair value gap with this low, came into the fair value gap, and then traded higher. Okay, think of all the people who are going to have their stops right here. There's going to be so many stop losses right here. So once I saw this and price come down, what is this? Order block. Came down here. Look how we came right back up. Okay. Or actually right in here. This is the candle. We have an order block right here. We have this low. People think that they would be so safe with their stop loss right there. But think of all the people who saw this move up and were looking to enter in on this fair value gap. You gotta get into the minds of these other traders. Because you're not only up against the market and yourself, but you're up against everyone else. So once they see this move, then they see that fair value gap, boom, they entered there, and they would have been correct on their trade, and their stop loss would have been here. But we're targeting higher prices. So price comes down, creates this order block, and makes this low right here with this candle. We leave this low intact. As soon as price comes back into this order block, I enter a short. Just not a crazy short. Nothing too crazy. Okay, it was simply, wait, let me bring this up. It was about a 3-hour trade. You know, it's pretty good. 3 to 1 risk reward. As soon as price came back into this order block right here, we came down with this candle and left this low intact. As soon as we went back into that order block, I entered a few contracts. Wrote it down. Took a little bit of profits out at that low. Came back up to the order block. Now we haven't flew past this order block yet, so my short trade is still valid, and we still have this fair value gap right in here and this order block. I entered a few more contracts in here, and then I scaled all the way out right as it hit this fair value gap in this order block. Now you might be thinking, why would I go short when price is bullish? You don't need to capture the whole move. You can take little bits and pieces. And that's what I did. I took it out at that low because I knew price wanted to go higher. But I knew that it wanted to take these traders out of the market first, so I capitalized on that move. And then as we took out that low, we came up. And just as I thought, then we blew out the order block right here. With this candle, we disrespected this order block. So now we can remove this. Okay. This order block right here, I'll mark it out. I'll drag that over. Drag it over right here. Just for the sake of the trade. Yeah, about right there. So, once I saw that, now we have minor sell side liquidity taken. Came back, price rebalanced where it actually wanted to. Came up, disrespected an order block. Now price is bullish again. Plus we took out this high and old lows. Market structure has shifted. As soon as I saw that, my target was now this high. So I entered in a little bit right here, and then I entered in more to the position right as we entered into this fair value gap. Okay, and then I was targeting just this high. That's it. What is this? Another 2.95, another 3-to-1 R trade, another 3R trade. Rode up to this high, took my contracts out, scaled out at that high, and I was done. Now of course price chopped around a little bit, took out some lows, and rebalanced higher. And just for the sake of the video, I'll mark out an order block is the last down close candle or the last consecutive down close candles. When you have 3 candles in a row like that, or however many, you can use that whole thing as the order block. And look at that. We came back down, held above that order block, and traded higher. Traded higher. But yes, that's all. Those 3 trades, the 1 trade in the early morning, and then the short here, and then the long back up above that high. And that's all you need. You don't need to get in at the lowest low and get out at the highest high. You only need small bits and pieces of the move. But that's it for the video. Go ahead and study that. Look how price reacts. Your homework, go into your charts. Look at your key levels, your pools of liquidity. Look at how price reacts to those levels. And then drop into your lower time frames. How does price react to the order blocks? Look at your moves like this. Look at your big moves like this. These down moves and these up moves. Go look for those in your charts. Look where they